Thank you very much for joining us today. I am Tadashi Ito, President and CEO. I would now like to begin GMO Internet Inc.'s briefing on the financial results for the first quarter of the fiscal year ending December 2026. Here is today's agenda. We will share with you the status of our financial results as well as progress in each area in line with our growth strategy. First, I'd like to explain the financial results for the first quarter of 2026, as well as the public offering and secondary offering recently conducted. These are the consolidated financial results. As of the first quarter of 2026, all indicators have achieved progress of approximately 25% against the full year forecast. This marks the start of the second year under the new structure, and we were able to secure solid progress across all indicators relative to our full year projections. Next, I'd like to explain the quarterly trends in net sales and operating profit. Net sales increased by 170 million yen quarter-on-quarter to 20.3 billion yen and by 1.29 billion yen year-on-year. In addition to the solid performance of the entire internet infrastructure business, including GPU cloud services, seasonal demand in the internet service provider business also contributed. Operating profit increased by 800 million yen year-on-year to 2.44 billion yen, while profits grew significantly mainly due to the launch of the GPU cloud business. Operating profit declined by 150 million yen quarter-on-quarter, mainly due to increased growth investments such as advertising and sales promotion expenses. This outlines the new share issuance and secondary offering resolved in March. The purpose was to meet the listing maintenance criteria for the Tokyo Stock Exchange Prime Market and to raise investment funds for the GPU cloud business. We conducted a new share issuance of 30 million shares and a secondary offering of 61.5 million shares, excluding the over-allotment portion. The issue price was 710 yen. And total funds raised amounted to 20.2 billion yen. As a result, the tradable share ratio, which is part of the listing maintenance criteria, improved significantly from 7.7% to 41.5%. We also received a notice from the Tokyo Stock Exchange confirming compliance with the listing maintenance criteria, which we disclosed yesterday. This is the disclosure we made yesterday. By achieving compliance with the 35% tradable share ratio requirement, we have successfully completed the initiatives we had been pursuing since the reorganization to meet the listing maintenance criteria. Next, I'd like to explain the use of the funds raised. Of the total 20.2 billion yen raised, we plan to allocate 19.7 billion yen to investments in the GPU cloud business. We have already invested a total of 10.1 billion yen, including 6.9 billion yen for GPU server procurement and 3.2 billion yen for investment related to the capital and business alliance with Turing. The remaining 9.6 billion yen will also be invested sequentially in the GPU cloud business through December 2027. I would now like to explain our policy going forward following the completion of the public offering and secondary offering. Supported by the stable and continuous growth of our existing businesses, which are expected to generate 15% growth in solid recurring revenues, we will aggressively promote investment in GPU cloud services using the funds raised. In addition, the completion of the offering has resolved constraints related to our capital policy, allowing us to move more flexibly in considering and discussing potential partnership and M&A opportunities. Next, I'd like to discuss the situation by segment. These are divided according to the segments disclosed in the financial statements. This slide further breaks down the segment details. The status of each business is as shown. We will explain the year-on-year comparisons and trends in more detail later. This shows the trends and the number of contracts for each business. In the first quarter, the total number of contracts across all domestic businesses reached 12.9 million, while there had been a significant increase in the third and fourth quarters of the last year due to large contracts in the domain business. That situation has now stabilized, and we are continuing to achieve steady growth. Next, I will discuss progress in each area in line with our growth strategy. This diagram illustrates our future growth strategy. To explain again, this growth strategy consists of 4 categories. First, we will continue the stable growth of our existing business, including the internet infrastructure business, which serves as our solid earnings foundation. This is the base of our company. Second, we expect further growth in existing businesses through synergies between the infrastructure business and the advertising media business. Third, we view new businesses such as GMO GPU Cloud as growth drivers. Fourth, through investments in partnerships and M&A, we aim to expand profit scale and enhance corporate value. First, I'd like to explain the status of our existing businesses. Along with the number of contracts, this is the recurring revenue ratio, which serves as an indicator of the earnings base of our existing businesses. The recurring revenue ratio for first quarter sales was 86.3%. We continue to maintain a high ratio, which contributes to our stable earnings foundation. Next, I'd like to explain the status of each business. First is the progress in the domain and rental server business during the first quarter. Existing businesses continue to show a steady increase in sales despite some fluctuation. The GPU Cloud business also continued operating at high utilization from the previous quarter. On the other hand, in terms of profits, operating profit declined quarter-on-quarter due to the start of depreciation for B300 servers and increase of advertising investments in existing businesses. I'd like to once again explain in detail the number of contracts in the domain business, which I touched on earlier in relation to KPI contract numbers. The number of domain contracts surged from the third to fourth quarters of last year. This was mainly driven by large-scale contracts from corporations and businesses for purposes such as domain trading and SEO, AIO testing. As these are one-year contracts, we expect a certain degree of decline in the second half of this year. However, since these were large volume purchases at relatively low unit prices, we believe the impact on business performance will be limited. At our rental server service, Konoha VPS, we have leveraged group synergies to begin offering an upgraded edition of Kusanagi, a high-speed CMS execution environment developed and provided by GMO Prime Strategy, which joined the GMO Internet Group at the end of last year. While we had already been offering Kusanagi, this upgraded edition enables even more advanced performance optimization and enhanced security. In addition, Konoha has begun collaboration with She Likes, one of Japan's largest and fast-growing career schools for women, against the backdrop of increasing interest in reskilling and side jobs. Through this initiative, we aim to expand our services to customer segments we previously could not reach and build a support system that broadens career options through online information dissemination. Next is the Internet Service Provider business. Supported by seasonal demand during the moving season, both sales and operating profit increased from the previous quarter. In addition to improvements in our sales mix implemented so far, we have also increased advertising investments, aiming to steadily accumulate profits both in the short term and over the future. As GMO Internet Group entered into a value-up naming rights partnership agreement with Saitama Arena Company Limited, Saitama Super Arena was renamed GMO Arena Saitama effective April 1, 2026. In addition to Internet provider services for individual customers, we also provide corporate communication services under GMO Biz Access. Leveraging the know-how we have cultivated through introducing 20,000 corporate Internet connections, we will support the strengthening of the arena's digital infrastructure. Next is the status of the Internet advertising and media business. Thanks to the effects of the reorganization implemented in the third quarter of last year, operating profit has recovered to the same level as the previous year. Going forward, we will continue monitoring sales trends while working to establish a stable business foundation. In the Internet advertising and media business, we are promoting initiatives to increase the ratio of recurring revenue products in order to stabilize sales. As part of this effort, we are offering GMO AI Easy Customer Acquisition and began collaboration with onamae.com in the first quarter. I will explain this in more detail later. In addition, by promoting trial usage, we aim to further expand sales going forward. Next, I'd like to explain initiatives related to synergies between the Internet infrastructure business and Internet advertising and media business. This summarizes the basic policy regarding synergies between the infrastructure business and the advertising media business. In addition to utilizing the marketing capabilities of the advertising media business to acquire new customers for the infrastructure business, we also believe it is possible to further expand sales by offering products from the advertising media business to customers within the infrastructure business solid recurring revenue base. Let me introduce several examples of these synergies. First, regarding GMO AI Easy Customer Acquisition, which I introduced earlier, we launched a discount plan for customers of onamae.com. Through this initiative, we aim to drive customer referrals from our strong customer base and generate recurring revenue. In addition, another example is the operation of a benefits website for existing customers of the ISP business, which is managed using the media operation know-how cultivated in the advertising media business, thereby improving customer satisfaction. Next is the status of GMO GPU Cloud, our new business. Regarding the B300 GPU servers that began service last year, all 25 units scheduled for deployment during the first quarter of 2026 became fully available. In addition, since B300 utilization rates are expected to remain strong throughout 2026, we decided last month to make an additional investment in 42 more units. This slide shows our investment track record in the GPU cloud business. Including the additional investment announced last month, the total number of B300 servers will reach 67 units by the fourth quarter of 2026. In addition, the remaining 9.6 billion yen raised through the new share issuance explained earlier will also be invested over time in strengthening GPU servers equipped with the latest chips. This illustrates the image of server unit numbers and utilization from 2025 through 2026. For H200 servers, utilization rates steadily increased, achieving near full utilization by the end of the year and maintaining high utilization into 2026. As for B300 servers, all units became available beginning in the first quarter. Although utilization rates are not yet as high as H200 due to the recent service launch, sales activities are progressing steadily. Against this backdrop, we decided to make an additional investment in 42 B300 units, which are scheduled to be deployed sequentially from the fourth quarter of this year onward. This is an update on the GPU cloud business. Regarding B300 servers, at the time service began, we only offered a bare metal plan, which allowed customers direct access to GPUs without intermediary software processing. However, similar to H200, we have now begun offering plans that allow customers to use multiple GPU servers together within a pre-configured environment. By using multiple GPU servers together, processing performance can be further enhanced. At the same time, the bare metal plan, which is in demand for inference use cases, will continue to be available. We are beginning to see use cases for B300 servers, so I'd like to introduce one. Turing is using both B300 and H200 servers, and we received comments from Mr. Yu Yamaguchi, CTO. They use H200 for stable operation of existing models and B300 for next-generation development, maximizing the strength of each platform through clear role allocation. An in-depth interview has been published on ASCII Web regarding the background behind Turing's decision to choose GMO GPU cloud. We encourage you to take a look. On March 17th this year, at GTC 2026 hosted by NVIDIA in San Jose, California, we received the Best NCP Award at the NVIDIA Partner Network Award 2026. Kodama, who oversees the domain and rental server business, accepted the trophy on-site from Chuck Tiber, Senior Vice President of NVIDIA Partner Network. NCP stands for NVIDIA Cloud Partner. The reasons for the award included promoting sovereign cloud initiatives in Japan using NVIDIA's recommended configurations, and receiving excellent evaluations from third-party assessment organizations while broadly demonstrating NVIDIA reference architectures to customers in Japan. Going forward, we will continue deepening collaboration with NVIDIA while contributing to the expansion of infrastructure supporting AI development in Japan and accelerating the social implementation of AI technologies. The next-generation distributed AI infrastructure technical demonstration, which we had been jointly conducting with NTT East, NTT West, and QTNet since last October, has now been completed, and we have announced the results. This demonstration connected GPUs in Fukuoka and storage in Tokyo using ION to measure AI workload performance on an AI development platform. As a result, we confirmed performance comparable to connections within the same data center, presenting a new option for separating computing resources and data. Going forward, not limited to this ION demonstration, we will continue verifying new technologies to meet future customer needs. Next, I'd like to report on the status of our partnership building initiatives, generally referred to as M&A. This outlines our basic policy regarding M&A. We will seek partners based on themes such as further expanding the share of our infrastructure and advertising businesses, strengthening recurring revenue products that further reinforce our recurring revenue base, and restructuring within the group. This is the future policy I explained at the beginning regarding the completion of the public offering and secondary offering. To reiterate, the completion of the offering has resolved the restrictions related to our capital policy, and therefore we intend to move more flexibly than ever before in considering and discussing potential partnership opportunities. Next, I'd like to discuss shareholder returns. This is the status of dividends for this quarter. Beginning last fiscal year, we introduced quarterly dividends, and together with the commemorative dividend related to the transition to the prime market, we plan to maintain a total payout ratio of 100% for 2 years, consisting of a basic payout ratio of 65% and a commemorative payout ratio of 35%. Accordingly, we will distribute 100% of quarterly net profit per share, which amounts to 6.02 yen per share. The full-year dividend forecast for this fiscal year is 21.51 yen per share. Progress against the quarterly dividend of 6.02 yen stands at 27.9%. Finally, I'd like to summarize today's key points. First, an important point is that the public offering and secondary offering have been completed, and we have successfully met the listing maintenance criteria for the Tokyo Stock Exchange Prime Market. As we also raised funds simultaneously, we will accelerate investment in new businesses and partnership initiatives going forward. In addition, first quarter progress has been solid, and we were able to start the fiscal year with progress exceeding 25% against our disclosed forecast, including operating profit. In the GPU cloud business, based on the funding raised, we have decided to invest 6.9 billion yen in 42 B300 equipped servers. Regarding dividends, we will continue implementing a 100% payout ratio in 2026 while maintaining quarterly dividend payouts. This concludes my presentation. Thank you very much for your attention. Internet for everyone.